All right, hello. In today's video, I'm going to share and shine some light on the basics. I'm not going to use any fancy terms. I'm not going to go fast. I'm going to break down the basics that every investor should know when getting started in the stock market. So, welcome to the channel. If you're not subscribed already, I really don't know what you're doing. It takes like 2 seconds to hit that subscribe button. It tells me that A, you're paying attention, B, you're motivated to make a lot of money, and C, you love me. So, if you love me, let me know. Also, I'll be giving away a hat to a lucky winner. All you have to do is, yep, you guessed it, hit that subscribe button, hit that like button, and leave a comment for a chance to win. Anyways, I like to think of this channel as a safe place for investors to get educated, discuss open-mindedly, and grow together. So, at any point, if you have any questions, please comment down below. I will get back to every comment. All right, enough of all of that. Let's just jump right into it. The stock market is a place where you can buy and sell shares of a publicly traded company. Publicly traded companies are companies that sell parts of their ownership to, well, the public. So, for example, Apple is a publicly traded company. Think of Apple as a literal apple. They are one big apple. Let's say that one big apple is worth $100. I know, that's an expensive apple, but we'll get to that later. Then, take that apple and cut it up to like 100 shares. What does that mean? That means each slice of apple is worth $1. Since you have 100 slices and that one apple was worth $100, now that's $100. So let's say I buy that $1 slice of apple from you and you successfully sold the other 98 slices. You have one slice, I have one slice, and 98 other people have slices too. What would happen if your friend wants to buy a slice now? There are no more slices available. I bought one, you bought one, and 98 other people bought one. You see what happened there? Supply and demand. There is a limited supply and there is a demand from your friend. But now what? I'm a smart investor. I see that your friend wants a slice of apple and he can't seem to get one for $1. So you know what? I'll sell it to him for $1.50. What just happened? That $1 slice of apple that I bought for $1 just sold for $1.50. That means that the value of that slice of apple is now $1.50. Imagine there's 100 other people who want slices too. You see a line of people out your door wanting to buy that slice of apple and they're bidding for it. You ask them, hey, who wants to buy this apple for $2? Wow, that apple was just selling for $1.50. Now you're asking for $2. Somebody buys it. That means that slice of apple is now worth $2. That's a very simplistic way of visualizing how supply and demand dictates the price of shares or slices. Now, think of that literal apple as something that actually produces income, like a company. Let's use the actual Apple company as an example. Apple makes money, they have value. Let's say they come out with a new phone, they make more money. Let's say they come out with a new iPad, they make more money. Let's say they come out with something they haven't been making before, like a car, for example. Now, they have the potential to make a lot more money. Their company value just grew. That means all of those slices of apples, all of those shares, all of those claims to ownership, they're more valuable, since the company now is more valuable. That plus supply and demand, plus speculation, plus how much money they make per year, all factor into the price of the shares. So how do you apply this to real life? Find companies you know, love, understand, and use. It's very easy. Just look around you. What's around you? What kind of phone do you have? What kind of computer are you using? Who's your cell phone provider? Do you use Facebook or Instagram? Are you watching this on YouTube? Did you Google search how-to stocks? Are you listening to Spotify later? The list goes on and on. There are companies out there doing great things, and you can actually be a part of it financially. You can benefit from all of these giant companies that make a lot of money. What do a lot of super wealthy people do? They find these companies, they buy shares of these companies, they buy that slice of apple for $1, and then they just walk away. They continue their jobs, they work, they live their lives, but they still have that slice of apple. they have those shares in those companies. They're just holding it. They're not stuck in a bidding war, day trading every day, stressing over the value of their shares. They just buy things that they know, love, understand, and use, and then they hold it. Better yet, they dollar cost average their way into a sizable position. That's what I do. Every single month, I pay myself by automatically withdrawing from my bank account and depositing into my investment account. I'll deposit like 10, 15, 20% of my salary into that account, and then take a look at what I'm holding. I'll check out my holdings and see what I'm down on. If I'm not down on anything, I'll buy more. I'll average down. I'll average up. It doesn't matter. I just want to keep building that equity. I buy companies that I like for the long term. And I just keep adding and stacking equity and growing into a sizable position into companies that I really believe in, that I use, that I love, that I understand. So a lot of people ask, why hold it? Why not buy low, sell high, then buy low again, then sell high, and then over and over again? Well, there's a thing, it's called the market timing fallacy. People think that they can time the market. It's important to know that really doesn't work well in the long term. It's about time in the market, not timing the market, because supply and demand will do its thing time over time. The company you bought will continue to do great things and make a lot of money. And your shares, they're going to appreciate in value as demand goes up and the companies make more money. If you tried to time the market every time, if you tried to buy low and sell high every time, you might miss news, you might miss the supply and demand movement, you might sell it one day, you might buy it another day, you might sell too early, you might buy too late, you might even get emotional. Buy, hold, walk away, keep adding, walk away, stay emotionless, stay strong, believe in the long-term plan. I have a video that talks about what I mean when I say long-term, so definitely check that out if you're not sure what I mean by when I say long-term. I haven't even gotten into dividends yet either. I need to make a video on that later, but to explain it very quickly, imagine that apple slice you bought. Imagine if it paid you every 3 months. It's pretty much a way for them to thank you for holding that slice of apple. They might pay you 8 cents every 3 months for every one slice of apple that you own. And then it just compounds over time, creating even more demand, creating even more reason to hold it. But anyways, there's a lot of ways you can get into the stock market. All you have to do is sign up with a broker. It's a place where you can buy, hold, sell shares. I have affiliate links in the description, so if you sign up there, you get a free stock, I get a free stock. It's great. So you sign up with a broker, you find a company you like, and then you buy it. Listen, investing is as easy or as hard as you want to make it. It's totally up to you if you want to stress over it, if you want to turn it into a casino, if you want to be responsible. It's up to you if you want to analyze charts, get real complicated, etc., etc. For me, I do a little bit of it all, but most importantly, I have my long-term account that keeps me grounded in a very strong foundation. I can never lose because I buy companies I know, love, understand, and use, and I buy them every single month, and I pay myself first. I have tons of videos talking about my investment strategies, but please, keep it simple, keep it fun, hit that subscribe button if you made it this far, and I will see you in the next video.